Welcome back to the Successful Farming Podcast. In today's episode, commodity market experts Nick Repke and Bob Lineman discuss the current state of the agricultural markets, focusing on the impacts of the government shutdown on harvest reports, yield expectations, and market trends.
Good afternoon. This is Nick Repke and Bob Lineman here with our Successful Farming October Marketing Podcast. It is a dreary afternoon here in October as harvest rolls along, and we are going to update you on a few topics that we've been talking about. Everywhere from the government shutdown, our harvest progress. We're going to talk a little bit about some of the yields we're hearing, not only from seed dealers and producers and a few elevators. Some of that is very interesting information, and a little bit about what the charts are telling us here this month. So good afternoon, Bob. Thanks again for joining us.
Yeah, Nick, how are things up in Minnesota there? I know harvest is plowing ahead. I mean, it's just moving every week. Pretty good weather, for the most part. But I know one conversation we can get right into it too. One thing I think every day we've had to deal with since the government shutdown is when are we getting back to government opening up? And I hope what we've read in the last couple days here that it might be soon. And I think everyone would appreciate that. It's a time of year where tensions are high because you're harvesting, combines, trucking, filling grain bins, hauling to town. It's just a lot going on. And then to not get your normal weekly reports or your normal monthly reports from the USDA just adds to that stress. So traders and farmers alike are just kind of sitting here wondering where we're at. And I think the best we've come up with, Nick, is using last year's numbers. And I think that's a very good estimate because we went into the government shutdown almost right on par with last year's numbers, and I think it's the weather's been fairly good across the Midwest, and to assume that we're 75% harvested by the end of this week, which would be, that's it's not quite the end of October here, but I mean, really the important part, 75% on beans and, roughly 55, 60% on corn. The important part is getting past that 50% mark. And once we've surpassed 50% harvested, then you seasonally see the harvest pressure on prices kind of ease a little bit. And I would have to say that we've seen basis improve in a lot of areas for both corn and soybeans. And just you see the futures price starting to kind of try to work its way higher.
Yeah, the agreement from my end is absolute there. I think that we are basically over the hump. The weather's been great here for harvest. Basis is picking up. We're running into some seasonalities, and I think the market is showing us here in late October that that USDA report in August continues to be the big number. So some of the stuff that we've been seeing with harvest is that continued basis improvement, mainly on the east or central side of the Corn Belt. We've seen some Illinois basis improve significantly. What was it, 20, 30 cents? I'm hearing reports out of central Iowa that their basis has got 5 or 10 cents better. Western side of the Corn Belt, still really poor basis, really wide basis. They're obviously slightly better crops out there than we're seeing somewhere in the central and eastern side. So that being said, what have you been hearing from some of your guys?
Yeah, I think it's been all over the map. The corn numbers, I think are, you'd have to say disappointing, but in a relative sense, it's still a good yield. I guess if you want to say it like that, I think a lot of folks were looking, for record yields in every field, across the farm, everything, and it wasn't there. And I think the biggest culprit that everyone's kind of falling back onto is that late season, whether it be rust or the tar spot, that disease, late season disease, really just put a hurt on the corn crop and soybeans. I know North Dakota got that early frost, and that clipped anywhere from 8 to 12 bushel an acre off the top is what they figured in north central North Dakota there, and even in the central part of the state. So again, it's I think corn wise, disappointing for the most part, just because everyone was looking for a huge number on the farm. And then soybeans, I think soybeans are probably a little bit more of a contained good to maybe a little bit better than what they had expected. But again, that's a handful of spots, Nick. I think the majority are saying it's about going to be right in line with last year. As far as a final, and I have clients, you have clients. There are listeners, I'm sure, that are like, "Oh, my yields are way better this year," but there are a lot of folks that it was way worse than last year. So it's something that going into this harvest, we had very little wiggle room for any errors anywhere in the Corn Belt, anywhere in the Midwest, as far as production goes. So in order to hit those USDA targets, so I think one of the better read analysts out there, Nick, has his yields back down to where they were last year. Where final yields were at last January for that crop. That's kind of what he's looking at right now, and I would have to say that that's probably a pretty good guess, Nick, based on what my clients have said and what the seed dealers I've talked to as well. I know seed dealers were disappointed that late season disease that it impacted test weight as bad as it did. A lot of 51, 52 pound corn out there, and that's just that's a tough one when you have a growing season like we did, and everything was looking really, really good. To end up where we are there, Nick, it's tough to see that out in the field.
Yeah, I totally agree with that statement. We've seen very wide swings in yield reports on my end, everywhere from central Iowa. Some guys were talking 160 to 180. For all you Iowa listeners out there, that is really poor. Even the really good stuff was a bit of a disappointment from basically what was expected 30, 60 days ago. They were really looking at a monster with all
Yeah.
the water and all that. Yeah, guys were excited about the crop. So, and where's it all going to go was the question. So, we're starting to see as these numbers will trickle back to us. I mean, we've missed one report with the government shutdown. We have been hearing some rumors, as Bob mentioned, from Beset this week that the government could open up here in the next week or two. That our next report is November 20th. How big of a discount do you think you'll see? I mean, they're expecting 1 or 2 bushels last month. Do you think they will accumulate those two reports and maybe make a bigger adjustment, or is it still going to be step by step?
Yeah, that's a great question, and I think everyone has that question right now. I'm hoping that the USDA will give some guidance ahead of the report, Nick. So at least there are no real big question marks when the numbers come out, and we're like, wow, what does this mean? What does this cover? So I'm hoping there's a little bit of foreshadowing, by the USDA there, and just saying, giving the market an update to like, okay, we are going to update you based from this time to this time, and let us know what they're doing to try to you know I don't know, front run that idea of the backlash they're going to receive by just throwing data at us and not really giving us any context to how they got to it, and how they're going to kind of make up for what they missed. But I know that we've talked about in the past here. Exports were kind of the hot button topic for wheat. Wheat was doing phenomenally. Corn was doing amazing. Soybeans, we hadn't gotten anything for China sales on the books there. We still don't know of any China sales on the books for soybeans or corn at that matter. But again, without their government open, Nick, we haven't gotten anything. We don't know what's really been sold or anything. The dollar remains underneath 100. A week ago, week and a half ago, we pushed up to, oh, that high was 99.30, and there was major resistance at 99.60. So we did not quite get there. It backed off, bounced off of the 20-day moving average here on Friday, and then now we are moving a little bit higher here. But again, I think we're kind of range bound in that dollar until the government opens up and we can kind of see where economic reports are coming in. And are we going to see one more, three more rate cuts? Between now and the end of the year or into January there. So the dollar specifically is going to be very tied to, very sensitive to those initial economic reports, I think. But again, you look at the stock market, money flow as we look in the outside markets, the stock market pushed to new highs. You saw gold and silver and palladium and platinum. The metal markets just exploded, and volatility is through the roof over there. It's you watch those charts. And gold almost hit 4,400 today, 43.9360 today, and now we're back to 41.25. So I mean, it's all over the place as far as volatility in these outside markets, especially the metals. But really, you flip over to the grains, we're kind of quietly trying to grind higher, build into this, Nick. And I think technically is what we're trading right now because we don't have any of those real reports to go off of. What are you looking for, Nick, on the charts here? Since we don't have any reports to really look at, what do you like in that December corn as far as upside targets here? I know it's tough because we've been in pretty much a narrow sideways trading channel for a while here, between 430 and 408, 409 on the bottom side. What breaks us out of this? What's going to be the thing that pushes us above or below this recent channel we've been stuck in?
Yeah, I think it goes back to our conversation that we talked about a little bit earlier was some of these yield numbers that we're trading off of now. Now this will be the second month in a row really where we're just churning this 420 on corn. I do think you're going to have to see some sort of government report come out really to push us above that 430, 435 and get the market believing that it's smaller than anticipated. So, I mean, we're seeing it from seed dealers and we're seeing it in basis, we're seeing it in producers, and the market's not seeing it at all. So, obviously, they don't believe any of that at this point. It's job to price it in, and we haven't really moved. You and I talked about that insurance number at 419 for October here. I went back and looked at the September's number. It is super close to that too. So we haven't really moved in 30 days. Obviously, no volatility, no new news, and harvest rolling in. So it puts a little natural pressure on it to move lower, and it hasn't, sitting tight. So that's in my eyes, it's productive. It's a little frustrating because we think the crop is smaller, but still productive.
One thing that I think that goes along with our thought of the crop being smaller because of reports being flowing into the market, into the office and through social media and all the folks that we talk to. You can look at the spreads as well. You pull up a spread chart between December corn and July corn, so the difference between new crop right now and then the what would be considered old crop out into July there of next year. And that spread bottomed, boy, more, back in August, mid-August, somewhere near 37 under. So December was 37 cents under the July. And just Friday, it had put in a level at 27 under. So it's rallied a dime since that August, the mid-August low. So roughly 2 months, you've moved a dime. That would, in my mind, that kind of tells you that the commercial market's getting a little bit more concerned that maybe we don't have as big of a crop out there as we thought at one point. They want those bushels to come to town to get their hands on them a little bit sooner. So again, keep an eye on those bull spreads. You can talk about it in the corn and the soybeans both. The corn I think has moved more, Nick, and is a little bit more impressive than what the soybean number is. But again, that goes from a 186 yield to where I think a lot of the traders out there, I think we're in the 183s, 182s maybe, Nick, to be honest. And I don't know that you're going to get many folks to say that out loud, but I think that's probably where we are without some guidance from the USDA here soon. You're just going to, again, the question, the bubble around it as far as where are we really trading? What happens if we end up with a 181 like last year? Where does that take the balance sheet? And, we were talking a 2 billion bushel carryout, Nick. I mean, a 181 yield and exports, if they were as strong as they were through this government shutdown, as they were ahead of the government shutdown, I mean, we could be looking at a actual new crop carryout somewhere in the 1.6, maybe 1.5. I mean, if you wanted to get real aggressive, so say 1.5 to 1.7 range. That's a big change from what was it, 2.1, a 2.1 billion bushel carryout at one point. So again, that's a big change for corn. That is a big change. And then if you throw in the what ifs of the old U.S. and China trade deal, if we can get something put together there, then really you just light the powder keg, Nick, and fireworks are going to start flowing, I think. So we just need to see some news is what we really need to get out of this.
Yeah, as we get through harvest, I do think we will see some of those news, and And, a 1.5, 1.6 would be amazing for prices. Even a move down to 1.7, 1.8 billion bushel carryout gets us back to levels for marketing is concerned, where guys are going to make some okay money on decent yields. Obviously, if you had huge problems, your break even's considerably higher. But most of the time, people around here are getting pretty decent yields, even though it's less than expected. And you can see, profitability at a 1.6, 1.8, somewhere in through there pushes us towards that, 460, 480 on the board, little better with a carry out into July, which you're seeing on some of those spreads. I did take a peek at those soybean spreads while we were talking. Obviously, haven't moved as much, and a little bit of that is some South America pressure that I think we're going to
Yeah.
continue to see. So, the near term, I think for beans is going to look really well if we can get some uh, yield adjustment, even small moves there, get that balance sheet from maybe that 280 to 300, a little bit closer to 2 million bushels or 200 million bushels. But that would create some fireworks there too. So it doesn't really feel, Bob, to me like, and especially looking at these charts, we talked about that corn chart, and I'm looking at the bean chart building the base. It doesn't feel like there's a ton of risk here for farmers to the downside without some black swan event. What do you
Yeah.
feel like on that?
I would agree with you on that, Nick. It really is, and I think everyone can label that black swan event as the trade negotiations that are upcoming. And I think that that's what everyone is waiting for. And you and I, Nick, talked about this. That really, if you had to let go of bushels in the last 2 weeks because of cash flow reasons or because you can't store it or whatever the reason might be, the options are not expensive right now. Volatility is for the most part seasonally low, and we've been in this sideways trading channel that really an option, buying a call option, or looking at some type of an option strategy to retain ownership is a very low risk way to take part in what if they do actually come together and make some type of a deal that has maybe not a huge amount of initial sales of grain from the US to China, but something. And I think that something will cause short covering, which we think the funds are roughly short about 100,000 contracts right now in corn, and somewhere 30,000 ish, between 20 and 40,000 short in soybeans, and roughly 70,000 in wheat. Why would they want to stay short if a trade deal of some sort is met, and then the potential of further bushels being sold? That, as a money manager, that would make me nervous to be staying in a short position. So some short covering, you get some new money jumping in on the long side on the news, and then all of a sudden these technical targets and overhead as far as resistance are in sight. I mean, we can reach those, Nick, and then we start seeing, okay, do those resistance levels slow this market down, or do we get through them and keep adding and keep adding and keep adding? Then does it really become a technical market? And that's where it could get exciting. But again, for right now, those are just what ifs. It really is. Those are what ifs, what ifs, what ifs. So it is nice to see that the November contract, which is dwindling in volume here, but that's okay. It's gonna work its way into its delivery notice, our first delivery notice here at the end of the month. Again, you're above all three key moving averages that I watch: the 20, the 50, and the 100-day. So the big one has been the 100-day moving average here over the last month and a half. Yesterday we closed above it. Today we closed above it. And we're above that 50-day moving average as well. So we're wanting to see those technical things kind of hold once we get through it, and then we can build on that, Nick. And I think that's what we're watching right now until the government can open up. I mean, that's what we want to see.
Yeah, I agree with you. One thing you mentioned is the price of options is very reasonable right now, and some of the conversations that we've been having in the office, you and I and our Al and Mark and the boys out in Wisconsin, is some of that reownership rather than paying insurance and interest. All that stuff adds up so much faster now. I'm seeing storage rates at the elevators anywhere between 5 and 8 cents a month on corn, and even higher on beans, and you include some interest, and shoot, I mean, you're at 15 cents a month between interest and storage, where these options that you talked about, even for 3 or 4 months out, are really, on corn, 10 to 15 cents, on
Yeah.
soybeans, anywhere from 20 to 30 cents. And you have some ownership with near the money calls that are going to allow you to participate if this thing really does get up and get moving. And if it doesn't, you're only out what, maybe 1 or 2 months of storage payments, and you have all that cash at home.
Right. Yep. You have to consider the alternatives with interest rates where they are, and how the elevators are kind of, trying to approach their month-to-month storages this fall. But again, Nick, I don't know. We covered the grain markets there pretty well. I know we briefly talk about oats every once in a while. I would love to see oats turn the tides here. They did get back above $3 today. They hit a high of 303, I believe, or no, 30, yeah, 303 and change, 303 and a quarter. So they did close above the 20-day moving average. They were right on it yesterday. Today we're above that. If we've turned the tides there, maybe oats knows. I
Yeah,
just
that's
love
right.
saying
There we
that.
go.
I love saying it when we can. I love saying it when we can. But that's just something that we keep an eye on. Keep an eye on all the markets as you
Okay.
can. And with that being said, what as we wrap up, moving to the last few minutes here, wrap up this podcast. What do you think of this livestock market, Nick? I
Oh,
mean, it's been the
it's
last few days and last week or so. It's just with news and headlines from outside of the market. Not from your normal normal sources here. What are your thoughts there? I mean, it's just it's a wild market if you haven't watched it, but we keep a close eye on all markets, like I said, and this one happens to be the last week or so. Just it's in that wild category for sure.
absolutely true. The news last Friday, for us from the administration to basically bring in and subsidize the beef market to drive retail prices lower was interesting to say the least. And the last 48 hours in trading here have showed us a little bit that even though this is a wild idea, that almost nobody believes it. So you've kind of saw some of the headlines out there, and I have too. But I mean, the long story short, it looks like that's a band aid or a short term solution to a longer term problem. When you're looking at those herds, Bob, what were you telling me earlier? Isn't it near like a 40, 50-year low?
It's a 50-year low or more, depending on who you talk to, for sure, as far as the U.S. herd size. One thing that you talk to the folks that have been in the cattle business forever, and even the ones that are just good at what they do, it's not importing actual meat to put in the counter at the grocery store. That's not going to really fix our problem in the US. Our problem in the US is that our herd size is so small. It's gotten to the point where it's at 50-year lows or more, that you literally have to bring in heifers. You have to import heifers from Mexico, from Australia, from anywhere in order to increase the herd size in the US. And that
Yeah.
kind of is
How,
the
how
underlying
likely
problem.
is that? Is
So yeah,
that
the
even
likeliness.
possible? Or
Well, anything's possible for the right price. I mean, that's how you have to look at that. But is it feasible, to have a big enough impact? I don't know. I haven't really looked in it because I just don't believe that this is the right solution. It's going to take some time. You had to push prices high, but yet you still are seeing the sale barns, the optimism in the sale barns is still unbelievable, Nick. It's just wild. You've seen box beef prices fall in the last, is it 4 to 6 weeks, from 415 and change down to 365-ish, let's call it. So a $50 drop in box beef values. Yet October live cattle are less than $1 away from those all-time highs that we just put in last week. So it's just like you're seeing a big variation, a big drop, a disconnect of sorts, if you want to go that far in that market. And we're watching some of these futures prices being above live prices on the fat cattle market, which is also a disconnect. The cash market has been leading futures higher. So are we just taking a pause right here, or are we ready for an actual bigger correction lower? That's one thing that we're watching. And then another part of it is the weights that feedlots are pushing the cattle to are a lot higher than what they have been. Just I think a year-over-year comparison on a hanging carcass weight, you were talking 36 pounds roughly, and you take that across the entire number of an annual slaughter, it ended up being like an additional 1.2 million head that you would have taken at last year's weights. So it's just as the math is all you have to do the math. You have to look at the numbers, crunch the numbers, and when the government's open, we can do that. And however, we can't right now. And that's so it's not just a grain marketing problem by the government being shut down at the moment. It filters across all the markets that we watch. But again, it's something that if the herd size starts to rebuild, okay, then where does that feed demand come from? then we can start looking at the bottom line for corn, and the balance sheet for corn is going to be adjusted because we're going to need to feed more corn. And so it just is, those are things that I think the corn industry is watching, the corn farmers watching, like, okay, if we get a few more cattle on feed, if we can do this, if we can do that in these other markets related to us, that's going to help offset if we can't get a deal done with China. And I think, Nick, I think that really is something that in the back of our minds we need to be considering, just for marketing purposes. That it seems like every few years we have to go through this. It's just like it's the up and down. And right now, China has the advantage of world supplies being ample, to be
Yep,
honest. So I think that's
that's
why they
right.
might be digging in a little bit there. But I guess, what are your final thoughts, Nick, as we wrap this up?
Well, a few final thoughts for me would be to make sure people aren't giving away crops at these levels unless you have to. We do expect basis and prices to, be steady, if not a little bit stronger here until we get back with you next month. Hoping that we'll be back with you after the next November 20th USDA report. Maybe giving you a little update on some marketing ideas as will have a better assessment of where price could go based on what the government is telling us. And hopefully, if you do have to let some things go, that you maybe take our advice and look at owning some options cheap that basically allow you to bring some cash home. So I guess that's the biggest takeaway for me is try not to give away anything too cheap here.
Yeah, I would have to second that thought, to be honest, Nick. It's just, with where option prices are, it's something you really, really need to consider. And it's, if you're not sure, give us a call. I mean, we'd love to walk
That's right.
walk you through that situation, and how it can benefit your farm, and how that process works.
What's the
My
best way to
final
reach you,
thoughts would,
Bob? Yeah, go ahead.
yeah,
Sorry.
best
Yep.
best number best number to reach me is 888-282-6141. 888-282-6141.
Okay. And a few final thoughts for you.
Yeah, my final thought would be just keep an eye on those spreads. I think that they are the foreshadowing indicator here that you just want to keep an eye on, because that, as they continue to climb higher and narrow up, essentially they climb on the charts or narrow between the two, that to me is a bullish indicator, on a bigger scale. And I think that that's something that I want to keep watching that and keep seeing that move in the right direction, Nick.
Yep. A little bit of a tattletale. So, well, we appreciate everyone's time. If you have questions, Bob mentioned it. The best way to reach out to us is our phone numbers. The toll free for the office is 888-345-2855. If anybody needs to reach me directly, it's 952-767-5510. But please give us a call. Bob and I are happy to talk to you. Anybody on our team is very excited to talk with producers on how to solve some of these problems here right at Harvest. So thank you.
Yep,
Bob,
thanks,
have a
Nick.
good day.
Yep, talk to you guys soon.
Thank you to our hosts today, Nick Repke and Bob Lineman, for sharing your expertise on the commodity market. For more conversations like this, visit agriculture.com. Don't forget to subscribe, rate, and leave us a review, and you can also follow Successful Farming on Facebook, Instagram, and Threads. And be sure to check out our other podcasts, 15 Minutes with the Farmer and Successful Farming Daily, wherever you get your shows.